Look at your goals. This is what you said you want to do. So frickin' do it. I review my goals 3 times a day, which means that I have to have goals to review them 3 times a day. If you're doing good deals, the majority of the wealth is going to come from forced appreciation, not the cash flow. Whatever it is that you do or you're thinking about doing, even if you haven't done it yet, you need to say that you do it and you need to tell people that that's what you do.
When you get in a group of people who are doing what you want to do, it accelerates your growth a ton. What's going on, everybody? Welcome to another episode of the Commercial Real Estate Blueprint Podcast. Today we have a special guest. We have Kassidy Warren. He's a commercial real estate investor who specifically focuses on boutique hotel investing. So we're really excited to have you on the show. Thank you so much for coming on.
Yeah, man. Excited to be here. Thanks for having me.
Yeah, absolutely. Jesse and I kind of got introduced to Kassidy through listening to a podcast. Our first guest ever was Rich Summers, and Kassidy was on that podcast at this point, probably maybe like half a year ago, if I'd had to guess, right? It's been a while.
Yeah, I think that one was about 6 months ago. I've been on a handful of times. Just Rich has been my mentor through buying boutique hotels, and so he's had me on a few times.
That's awesome. That's really cool. Are you in his mastermind?
Oh yeah, yep, yeah. That's a big part of my story is joining his hotel mastermind.
Cool, awesome. Well, let's jump right into that. Tell us a little bit about your story and how you got into commercial real estate investing. More specifically, your journey to the boutique hotel investing.
Yeah, I think like a lot of people, I was a corporate burnout, right? I had a career in corporate America. I saw the writing on the wall. I didn't like what I was seeing from my leaders and the other executives. Wasn't making a ton of money compared to the amount of time and effort and energy I was putting in. And so went into van life. My wife and I needed some headspace, went into van life and lived in our van for about 6 months, realized that we wanted to invest in real estate. Had always loved architecture, homes, had a draw towards buying homes and assets. We had our own, but we hadn't done any investment to that point. And so basically there was a 5-year period where we bought 2 short-term rentals every year. And we did a ton of renovations, rehab. A lot of them were in Arizona. So we focused on like design, amenities, pool, hot tub, like existing in nature and creating the guest experience where you don't ever have to leave the house if you don't want to, right? Everything is provided and you're like evoking emotions from the guests. That was a big priority for us. And so what ended up happening is every house got bigger and bigger and more expensive and more renovations. And I didn't get great at figuring out how to scale and figuring out how to bring more people in. And there was a lot of things that I wasn't doing very well. And so that caused another round of burnout. And I was evaluating my time, my energy, and the amount of money that we were making. Like a lot of people would look at it and be like, oh, that's a lot of money. And it is comparative to what we were doing. But knowing how much I was pouring into these houses, it didn't feel like enough and it didn't feel right. And so that's when I went on the search for mentors. And that's when I found Dan Martell, who's my business coach, and Rich Summers, who is my hotel real estate mentor. And that was joining the real estate mastermind. And so within 6 weeks of joining that mastermind, I was able to connect with everyone in the group. There was deals going on, and I was able to join on with a couple of guys that had a deal in progress in Solvang, California. And I was able to raise money, which was like a huge fear, raise money and close on my very first hotel within 6 weeks of joining that mastermind. And the reason that I say that is because that's not too uncommon, right? 6 weeks might be a little fast, but for most people, but when you get around a community, when you do that, that's like how you accelerate your learning, how you accelerate your ability to go do things. Even as smart as me, as an engineer, IT, I had done about 20 transactions up to that point on the residential side, whether it's buying, selling, refis, about 20 transactions. So I knew everything about closing and all the financial side and all of that on the residential side, but I still couldn't figure out how to underwrite a hotel before I joined the mastermind. And then once I learned, I was like, okay, I get it, right? So since that point, closed on that one, and I can give you more details about that. And then now I'm under contract on 2 more because of that partnership, because of that group, and because of the amount of work that I put in to get to this point. So that's my trajectory now is boutique hotels, and then some luxury flips on the residential side. We're still going to keep some of that, but it's going to be bigger, higher dollar amount, luxury flips on the residential. So
that's so cool. It's funny you say that. Well, Jesse just finished reading Buy Back Your Time by Dan Martell, and I'm like a little over halfway through it. So the timing of how, when you meet people is interesting, that we're literally in the middle of reading that book. He seems like an absolute, beast. And I know he is.
Dan is an absolute beast. I've got to spend quite a bit of time with him. I got to go on his jet. Actually, first ever private jet experience was with Dan.
That's great.
It was both insane and very normal feeling at the same time, because Dan is exactly who he is. You see how he's built his life, how he lives exactly how he is in the book and on his content, and how he does give and give and give. And it doesn't matter if you're a little real estate guy who's buying houses or if you're a $100 million CEO at a company, he's going to pour into you no matter what. And so that, like, Dan has like changed my life. Rich has changed my life. And obviously the things that I've done, given that information and given that access, have changed my life.
Yeah. We're big believers in mentors. And then also just like being in groups like that. We, the company we work at, City Plat, they're a part of one called Commercial Academy. And a lot of the guests we've had on this podcast were from Commercial Academy. And they have a very similar story of, maybe didn't have any commercial real estate or made like 1 or 2 deals. And then they joined that group. And it's a mastermind of people who are buying commercial real estate deals. And they just exploded. And funny enough, I went to that, I guess it was about a year ago, almost a year ago. And I had been at City Plat for a while, but I went in there and saw everybody presenting on the deals that they were doing. And I was thinking in my head, like, man, I could do that. I could do that for sure. And so then fast forward to this last quarter, we closed on our first two commercial real estate deals. And I feel like a lot of that was because of just seeing other people doing it and just exactly what you're saying. When you get in a group of people who are doing what you want to do, it accelerates your growth a ton.
Yeah. What people don't realize is your ability to be successful is actually a function of how many people know who you are and how they feel about you. It's your reach and your reputation. Like, if you're sitting there wondering why you're watching all these other people do deals and all these things going on, and you're like, I can do this. I'm worth this. I know how to do all this. Why am I not able to do this? It's because nobody knows who you are and nobody knows what you do. And so the more that you can put yourself out there, and whether you want to call it networking or whether it's social media content or just like shaking hands or going to meetups or whatever it is, like the more people that know who you are and the more people that know, like, and trust you, the more business you're going to be able to do, the more deals will come your way. You will find your people, and those people will want to work with you. And there's so many deals out there. There's so many deals going on all the time. You just need more people to know who you are, right? That's really like the bottom line.
Yeah, I'm glad you said that, because what we've been working on a little bit is personal branding and stuff. And that's a little like, it's like, we have a lot of reasons for starting the podcast, but this is one of the big ones, was increasing our personal brand. People see Graham's got a lot of knowledge, a lot of questions in brokerage. I have my own glove company, so I'm more on the business side, but I also love commercial real estate. And, nobody really knew who when I was, but, people know who Graham is, working in the business for 6 years. But when you put yourself out there on the internet, social media stuff, we get on other people's podcasts, people come on our podcast, they see, we network. It's huge, the difference and the impact that it can make. And you can even connect on social media with people in your regions and stuff, and deals can be happen. My first brokerage deal was done from an ad that I ran trying to find a tenant for our building. And well, that broker couldn't find a tenant for our building, we bought a building that he was selling before it even went on the market. So it works.
That's the thing, is if people don't know what you're doing, or if you're kind of wishy-washy about it, like, they're not going to be able to make the connection that you're serious about what you're doing, or they just may not even know. Once people know, so if you're saying, and this is important, this is something that really changed with me, and this came from Dan, this came from Rich, this came from lots of other people, saying, I buy hotels, I buy multifamily, I raise money for startups. Whatever it is that you do or you're thinking about doing, even if you haven't done it yet, you need to say that you do it, and you need to tell people that that's what you do. As soon as you start committing and saying, this is what I do, I buy hotels, and be able to describe it of like the benefits or why you do it. So like, I buy in coastal areas near national parks. I want at least 20 units. I buy in the $2 to $12 million price range for boutique hotels. I look for value add. I don't want a turnkey. When you say that stuff to people, then their mind can start making connections and be like, oh, I am interested. Like, you're sort of selling them without selling them. You're just telling them what you do and why you're good at it. And then they can make the connections of like, oh, I know this person. I know this person. Oh, I got this deal. And that's how things happen. If you're saying like, oh, I want to buy a house, or I want to do this, or I've been looking on Zillow and there's nothing available, and I haven't called any brokers, they're not going to resonate with you. It's like a subconscious thing that happens, that people don't take you seriously if you haven't made the decision, if you haven't committed, and you're not using the language that can resonate with people.
100%. We just dropped an episode like maybe 2 episodes ago that was the power of focusing. in commercial real estate. And it's like, it's exactly what you said. Being a broker, people come to me all the time and say, hey, I want a good deal. And it's like, well, what is that? Yeah, I'm not going to remember that person. I'm not going to remember what they want. But if they come, like if you came to me and said, I buy boutique hotels in coastal areas, $2 to $12 million, I'm going to remember that. And if I see something, I'm going to send it to you. So I agree with you 100%. If you focus on what you're after, and a lot of action will come from that.
That's right. That's right.
Yeah. So walk us through, are you still, do you still have any of those former Airbnbs that you were running, or did you sell all of those and then go all in on the one boutique hotel you have now, or what's your portfolio look like now?
That's a great question, because by focusing on what I didn't do right with the Airbnbs and what I want to do with the hotels and commercial real estate, that's how I kind of developed the velocity of money strategy. And I realized that there's sort of 4 accelerators for the velocity of money, and why I'm selling a lot of my portfolio to then go buy commercial real estate. And so the first accelerator is really forced appreciation on commercial real estate, where like with our Airbnbs, you can generate a lot of income on those Airbnbs, but the actual value of those properties are only based on the market comps. And so you can generate $1 million in income on a $500,000 house, but the house is only worth $500,000. It's not worth anything based off the income. And so with commercial real estate, that's the opposite. What's true is that if you can increase the NOI, you can increase the value of the property proportionate. So on a hotel, let's say there's a manager's unit where the manager used to live, and we convert it because we don't need an on-site manager anymore. And we can convert it into 1 or 2 more units. And let's say that nets us an additional $50K. Well, based on what's called the cap rate, that additional $50K is actually $500,000 in value on the property. If you bring in an extra $50K in on a Airbnb, you're not adding an extra $500,000 to the value. And so that's like the biggest benefit for me, and why I switched to commercial real estate is the forced appreciation aspect. And so with our portfolio, what I'm doing is I'm looking at the return on equity on our existing portfolio, and everybody should do this. Everybody should go back and do the return on equity calculation. And the way I like to think about it, because you can do the percentage, but the way I like to think about it is if you sold your property, so let's say you've held something for 5 years or more, and there's a reason why, and I'll get to that, why 5 years is important. But if you held something for 5 years and you're like, I have a lot of equity and maybe the cash flow is not great, or maybe it is good, but let me look at this. You look at how much cash flow you get, like in your pocket every year after all expenses, everything. And you compare that to if you sold, what's your bottom line number that you would have in the bank account? I like to look at real dollars after all fees and everything. So let's say you're making 10 grand in cash flow, but if you sold, you would get 100 grand. And so what I look at is that's 10 years of cash flow that you get in one hit. You get 10 years of cash flow in one hit. To me, that's a really good sign that you should be selling your property so that you can then go use leverage, which is another accelerator in the velocity of money. So you use leverage with that 100 grand and you can go buy essentially a $500,000 property. And then now what you're doing is you've just traded up. You should be trading up. And so you took let's say that the property that you sold was 200 grand, but because you've held it for a while, you got 100 grand in the bank after selling it. Now you bought a $500,000 property, and you should be cash flowing the same or more. So you've increased your cash flow, or maybe it's around the same level, but you're appreciating on the 500K. So instead of appreciating on 200K, you're appreciating on 500K, which is more money. And now you've reset your tax benefits, because if you've held something for 5 years on that old house, you've probably used the majority of your tax benefits through depreciation, cost segregation, all that. Now you've reset the cycle. And so basically every 5 years, you should be looking at whether you should sell a property or not based on your cash flow versus equity, and then what your need is on your tax benefits. So if you're having a big year, you have other business, or maybe you're selling some stuff, you should really be looking at, can you leverage trading up into new properties, and really focusing not on cash flow, but appreciation, and specifically forced appreciation. So if you do the math, and this is why I'm selling off my portfolio, I'm not doing it all at once, but we've already sold one, and then 2 more are listed right now, and we're selling them all in the first quarter of this year. We might sell another one like around summer, but that's giving us enough time to then go buy a bunch of real estate we're not 1031ing because we're buying it at the beginning of the year, and we're basically going to lazy 1031 and give ourselves time to find the right assets and still offset all of our income and depreciation recapture and all that stuff from buying boutique hotels and other luxury flips that we're doing. So yeah, that's what we're doing. That's a velocity of money strategy is basically figuring out when to sell, trading up, forcing appreciation, and then either refinancing or selling when it's appropriate.
Yeah, no, I agree 100%. One of the principals at our firm mentioned something similar to what you're talking about, yearly going back through your portfolio and analyzing what you guys have and figuring out what your, ROE is. And we did that a little bit. I don't think our duplex, we have a duplex that we're Airbnb at the moment. It's cash flowing pretty well, but I'm not sure it's quite at the moment for us to sell yet. I think we talk about it all the time. It's like, do we sell this thing? And it's, I just don't think we're quite there yet, but with the 10-year cash flow. But
I said 10 years, but really my rule is around 6 because because then you kind of do the math and it's like, that's worth it enough if you're going to go trade up and double your money in a couple of years, right? So how quickly can you double your money is kind of the way that I think about it. And then the tax benefits are a 5-year cycle. So the 5 to 6 year cash flow range is kind of where I sit.
Yeah, no, that makes a lot of sense. I just recently sold a little single family house. It was the first investment property I ever bought and did that exact same thing. 1031 into a warehouse building we closed on a couple months ago. It was empty. We signed a lease and now the value of that property went up, a lot, forced appreciation quite a bit. So we took the equity that I had from that single family and, probably 5x'd it. So we did that exact same thing, the velocity of money. So I'm very, very strong believer in that.
Yeah. And so we just sold our first investment property that we ever bought too. And so let me run that money trail so that your listeners understand also the infinite return, which is we used a HELOC to buy our first investment property. And so we used, I think, 30 grand of a HELOC, which is borrowed money. So technically not cash. And then we sold it and we netted 200K. We made in total over 5 years, we made over 410K off of that initial 30 grand investment, which actually was borrowed money. So it wasn't even cash. And so we spent $0 of our own money, of real money, to own this house that we made over $410,000 on over 5 years, plus the tax benefits. And now that 200K that we got, infinite return, meaning there's no money into it, no real cash into it, infinite return. We're going to take that 200K. We're going to use a little bit for ourselves on coaching and other stuff, but then we're going to take about 150 of it and put it into a hotel that in 3 to 5 years should be worth 300 to 500K on that 150. So now we took a HELOC, 30K HELOC, and it's going to be worth almost 500K in cash. And that's just one house. That's just one house over, let's call it an 8 to 10 year period. And now we've got 9 houses. And so if we do the math, and all of them were bigger and more expensive. So this is the thing that people need to understand. This velocity of money strategy of being okay selling and trading up and being okay not doing the 1031 and looking at appreciation and the equity, not necessarily your cash flow, because if you're doing good deals, the majority of the wealth is going to come from forced appreciation, not the cash flow. So if you can figure out a baseline cash flow, and the quicker that you get to investing for appreciation and forced appreciation, the quicker your wealth is going to grow. You just have to figure out and be okay with living on chunks of money that come in versus cash flow all the time. And that's not to say there's no cash flow. It's just your wealth is going to come from refis and exits and trading up.
Yeah, 100%. And we talked about that with our last guest. I think that's one of the hardest things about commercial real estate is like you can make very, very good money and it can be in big chunks, but it's like in the in-between, it's like, how do you offset that and, pay your bills every month? But no, I agree with you 100%. That's so cool. And I think that's really, we talk about it all the time, but that's why commercial real estate is so much better than residential. You cannot do that in residential real estate. You cannot. You can buy residential property and then trade in, like you said.
And I think that's how most people should do it, right? I mean, I do tell people, like, they ask me, should I get an Airbnb or should I get a boutique hotel? And I'm telling them, go get a boutique hotel, but you need to surround yourself with people that know what they're doing. Yeah. Like, if you've never done real estate before, to go buy a boutique hotel on your own is almost impossible, I would say. You have to be surrounded by the right people. Otherwise, the normal path is like, oh, I did a bunch of residential, but now I realize it's not as worth my time, and I want to go into be able to scale and make more money.
Yeah.
And the other great thing about commercial is it's a team sport. You need people, which means that you're not doing it all on your own. With the residential, it's a lot on one person's shoulders. Like usually the business model does not support having a big team unless you're like really doing a big business, but then you're introducing different risk, right? If you're just a mom and pop, if you're just, the HGTV couple, it's a lot of work for one person or a couple to take on all this work just for one residential house versus in commercial real estate, it necessitates a team of people, which is good because there's more to go around and you get to build relationships, which bring you more deals in the future. And you get to focus just on one thing or a couple things, right? You're just focused. You're not spread so thin. So that's another benefit that is not just the money benefit.
Yeah, for sure. And talking about the cash flow, I'm curious because, we're primarily right now, we decided this year we're going to focus on industrial. Prior to this year, we had our single Airbnb, which is 2 units, a duplex, and it did well. So we were thinking like, man, something like a boutique hotel, listening to Rich Summers podcast all the time. People like you come on, talk about it. Seems very interesting. We don't love the Airbnb because it's just a smaller duplex. So it's not necessarily like a vacation market at all. It's in Durham, but we did like the idea of like the cash flow and stuff, obviously. And we also both love traveling stuff. So boutique hotel is appealing for sure. But like, what do you think of realistic? And I know it's obviously going to vary by deals, but one of the things about boutique hotels and Airbnbs is you can get way more cash flow. It's a lot more management intensive. It's on that side of the scale, but you can also create a lot more cash flow than like a, less management intensive asset, lower cash flows. Like, what do you think somebody could expect if they were to go out and buy their first boutique hotel in terms of cash flow?
I think you're going to have to wait about 12 months before you get any realistic cash flow. Just being transparent with the model that we do.
Yeah.
Because we find assets that are, good bones, but need work. They're value add. And so you tend to try to buy at a discount compared to the market. You come in, you do a bunch of renovations, you get a good operator, you add amenities, new marketing, new photos, you do a social media campaign, right? You build more awareness, you try to drive demand, which then can drive up your prices. But that takes about 12 months for it to really start to ramp up. And then if you have investors, they take the priority on the pref payment and any, there's the cash flow split. But like the first 12 months, your investors are going to get paid first before you get paid. So just realistically, but then after that, depending on your own investment level or the equity split, like how the deal is structured, you should be getting, a percentage of the cash flow. So it's all deal dependent. The interesting thing about the Solvang deal is we had to buy a house that's on the second lot with the hotel. That was just part of the deal because the current owners, that was sort of a requirement that they needed to have a place to live for a family member after the fact, and the house needed to come with it. So that's the funny thing about this one. But for that one, the house was about 30% of the purchase price, but only about 10% of the income. So that skews our ability to cash flow based on the amount of money that we had to raise. And so we're going to eventually end up selling that. And so that'll bring an influx of capital back to the investors and back to us. And then we'll remove some of the debt off of the deal. So by getting rid of that, we'll be able to cash flow and have an influx of capital when that happens. So, but we have another deal from another couple in the group. They bought a hotel for $750K and they're expecting, I think, to do like 1.2 million in gross.
Jeez.
Yeah, exactly. And that's because they will also build a brand, use influencers. They're willing to spend a little bit more money. They bought in a really good market. They found their niche, right? And so the thing with hotels is you have more levers that you can pull. And this might be true for industrial or like storage, I think is another good one where you can pull different levers. You make the updates, you add amenities that people are looking for. You can add different fees, right? So if we're going to market heavily towards pet families or pet couples in Solvang because we're a pet-friendly hotel, dog-friendly hotel. We know that there's a search term that's really strong out there for dog-friendly hotel, and there's only one hotel that services that search result right now. So if we can become that and half of our guests are from dogs, then we can charge pet fees. And if we become well known for having additional pet amenities, that's going to continue to drive demand. But pet fees, resort fees, day passes, being able to add additional fees, but also not just fees, review strategy and increasing the hospitality side and really driving 5-star reviews so that you can increase your occupancy and outperform the market. That is where like the magic happens. You can't do that on multifamily. Multifamily, you can only raise rents so much. You can only add so many fees, which is why their cap rates are lower. But with hotels, yes, it's more management and hospitality intensive, but that is also a benefit to you because then you have a lot more levers that you can pull and you can try things out. And then anything like those fees, the resort fees, the pet fees, those go straight to the bottom line. Those are what I call found money, because there's literally no expense or a very small additional expense for that money. And as we talked about, the NOI determines the value. So if I can add $500,000 in fees with no additional expenses, that's $5 million in valuation, right?
It's a lot.
Yeah.
It's a lot. I just watching yesterday, Tyler Cobble did a video with Ken McElroy about his, he has like a boutique hotel type asset in Sedona. And he was talking about how he added, like he changed the alcohol, like it was like lower level wine, and he changed it to higher level wine and like added more wine to it. And that right there added like $100,000 of NOI and, you know, obviously increased the value by so much. So I think that's really interesting that in boutique hotels and stuff, there's a lot of creative ways you can add value.
Yeah. And the other thing that I want to mention, if anyone's thinking about getting into boutique hotels, is something that new people getting into the space forget to look at is your exit strategy. So if you want to hit a certain number at your exit, and again, we're talking velocity of money, we're talking the money is made when you exit or when you refi, that means that your exit price or your valuation needs to be realistic. And so yes, it's NOI divided by cap rate, but you also don't necessarily want to be the first one to ever achieve that price per room. So if your NOI divided by cap rate is way and far and above anything else that's ever sold in the area, you still have to be realistic about it. But you also want to look at who your buyer is going to be. And so if you're going to be buying or selling to a Marriott or a hedge fund, institutional investor, you might want to go figure out what they require from the hotels that they buy. And you want to plan to make sure that you meet those standards, not necessarily the design standards and all that, but if they require certain air conditioning or if they require food and beverage or a certain square footage or a certain number of rooms or whatever it is, you should go figure out who your next buyer is going to be and then make sure that what you're building and renovating for fits within their buy box so that you can go, when you're ready to sell, you have a market that you can go sell to.
Yeah, I agree. And that's industry wide. It's not just boutique hotels. I think that's something that's good to bring up because I'm looking at a retail center for a buyer right now, and they're trying to like have this like super high unrealistic price that you can't buy at and DSCR, and like there's a whole lot of other, you know, circumstances behind the reasoning of that. And I think that's good for people to understand, like, okay, if I'm going to buy this thing, who the heck's going to buy it when I'm done with it? You know, because when we force that appreciation, a lot of people want to cash in on that. They want to take that appreciation out and velocity of money. They want to go to the next deal. So I think it's great. I think that's a great point.
Yeah. The other piece is that's a benefit of doing commercial real estate is, and it's more common on the residential side since Pace has been talking about sub 2 and all that stuff, but creative financing. So a lot of the listings that you'll see, and you just mentioned it, is overpriced. Right. That's just how it goes. Stuff on Crexy and LoopNet. It's overpriced because the brokers already passed it around to all their buddies, their investor buddies, and all their investor buddies passed on it because it was overpriced or there was something else going on that they didn't like. So then they put it on the open market, and usually it's overpriced. But if it's been sitting there a long time, or let's say you find an off-market deal, which is really the best way to go about commercial real estate, is finding off-market, building relationships with brokers, people like you, where you can then find the good deals and be the first one to see the deal.
Yeah.
But you can do creative financing. And so a good example is like, let's say they're listed at 10 million or whatever it is. And they're like, oh, I don't want to do seller financing. I don't want to do creative, whatever it is. But your ability to negotiate and talk to them and show them the benefit of seller financing, how they're going to get a chunk of money. They won't have to pay as much in taxes. They'll get a monthly check. And let's say you can't pay the 10 million because it doesn't work for your numbers, your underwriting. But let's say you can do 9 million and interest only payments for the first 3 years. And actually, when you add up the 9 million plus the interest only, that might be more than the $10 million. And so when you can talk to them about that and say, hey, look, if you do this seller financing with me, you're actually going to get more money. It's just going to take 3 years, but you're going to get 10.5 million. I just can't pay you 10 million right now. I can pay you 9 with interest only payments for 3 years. And then that works for both of you because they're getting more money and then you're getting something that works for your underwriting and it works better for your investors. So that's the really cool thing about commercial real estate is the ability to negotiate and like work with people. And usually, well, I'd say 50-50. People that own these assets, they've done some sort of commercial real estate deal before, right? They already own this. So a lot of them already understand seller financing or creative financing. It just depends on the situation they're in. Like we were looking at one in near Raleigh. It's I think it's called the Furry. I shouldn't even be talking about it, but there's a 21 unit, and I think they're underwater and they have their loan coming due. So they're under the gun, but they don't want to take less than a certain price because they have to pay their loan off. But it's getting down to the wire. And so now how do you both work together to say, well, I can help you with this if you work with me on this, right? And so then that's the kind of conversations that you can have with certain sellers, because you never know what situation they have, and your ability to work with them to meet their needs so that they can also meet your needs is really important.
Yeah, 100%. Creative financing across any asset class is absolute game changer. The deal we bought recently on the warehouse deal was a creative financing deal. And traditionally, it probably would have worked. It would have worked and been an okay deal. But because of the seller financing aspect, it became a phenomenal deal. So I've heard Rich say that a lot in his podcast, talking about how the boutique hotel space has a lot of sellers who are very familiar with creative financing, because they may have bought it 20 years ago on seller financing, because it is harder to get a loan on that kind of asset.
Yeah, because typically what we're doing, if we don't do seller financing, is we're getting bridge loans. And a lot of people are afraid of bridge loans because they've always heard, temporary financing, interest only, stay away, right? We're used to the conventional 30-year mortgages on homes. But with commercial real estate, the reason why bridge loans work, and they can get you in trouble, like is happening on multifamily right now. But the reason that bridge loans work is because you're doing the model of, we bought at a discount, it needs work. We're going to do the work. We're going to increase revenue, which means that we're relatively confident that the value is going to increase in the next 3 years because of the work that we're doing. So then the bridge loan is a temporary solution, and you just factor the costs in for that. And then you pay the bridge loan off when you do the refinance into perm debt. And the way that we underwrite, and I recommend this for everybody, is you underwrite conservatively. So you're saying the bridge loan is actually a higher interest rate than what you think. So rates are about 9 to 11%. I underwrite at 11 or 12% for my bridge loan. And then when I exit or when I refi, I estimate that the cap rate goes up at least 1.5 points, if not 2 points. And so when you're looking at your deal and you're saying, oh, I've got a higher interest rate loan for 3 years. When I refi, the market's going to actually get worse, and my numbers work, and I have a good IRR, and I have a good equity multiple, and this is all good. That means that's a really good deal, because if the market stays the same or gets better, that means it's a freaking home run grand slam for your investors. So if you can conservatively underwrite this stuff, and you can use bridge lending, and you're confident in your ability to renovate and operate this thing really well, you're going to knock it out of the park. And so what I'll say for anyone that's looking to get into boutique hotels, get into your first one as quickly as you can, right? Even if it's a small 6 unit, 10 unit, 12 unit, get into your first commercial deal and just knock it out of the park as much as you can. And that doesn't mean spend a bunch of money on it to make it look nice. What that means is whoever your investors are, make them their money back and do well by your investors. The sooner that you can go through a full cycle investment or even get to a refi on a commercial asset, that's when you are an expert or a relative expert. And then you can go to other investors and say, look what I did for these investors. I tripled their money in 3 years on this 6-unit hotel. The sooner that you can do that, the sooner you're going to be able to get to the next one and do bigger deals and more deals and have more equity in something. Your first deal, you might have to be the boots on the ground. Maybe you only got a couple % of the GP, but that's okay, because then the next one you're going to have more and more, but you need to knock it out of the park for your investors. Your ability for someone to go talk to your investors and look at the deal and have them say, yes, he crushed it. He was the reason this was successful. She was the reason this was successful. That's your golden ticket to the next one. That's your golden ticket to being successful.
Yeah. No, that's awesome.
Yeah.
We harp on that all the time. Like, getting a mentor or doing your first deal with somebody who knows what they're doing is critical, because you can go out and do a commercial real estate deal by yourself the first time, but the chances of it going smoothly or well or not being a big problem are pretty slim. So you definitely want to get into a deal with somebody who actually knows what they're doing and just learn everything you possibly can, and don't expect a lot of equity. I agree with that 100%.
Yeah, you can't think about the money on the first one. You can't think about this is your resume. This is that entry-level position at a corporate job where you're raising your hand and you're making sure everybody else knows who you are and that you crushed it on whatever stupid little project they gave you, right? This is your entrance into the game, into the arena. And you need to make sure that you're surrounded by people that know what the hell they're doing. And you do that by getting into community and the right communities, the ones that resonate with you, the ones where the resources are available, with the people like you two and Rich, or I know Blake and Mike Shorgren, Blake Daly, Mike Shorgren, they're doing hotel masterminds too. Like I know there's an entrance fee, because I talk to people all the time trying to get into Riches, or they're going into Riches and others, and they call me and they're like, is this really worth it? And I'm like, look, I'm under contract on my third freaking hotel in under a year. You tell me if it's worth it. Yeah. I get it. People have hesitation, but you have to invest in yourself, and you got to surround yourself with the right people to be able to do this stuff.
100%.
Yeah. That and taking action. You just got to get started at some point, and biting off that first deal is what's going to do it. I did want to talk with Dan Martell, buy back your time, a little bit before we had to hop off here, but I wanted to circle in here because I just finished a book, and we're kind of looking at personal assistant, and I've talked to your personal assistant, and she seems, extremely professional. She was like, well, Kassidy can only do these times, and like, well, here's our times, but like she managed your calendar really well. Like I was impressed. It was awesome. But I just wanted to like understand like how you set up your business and real estate side, because I know Dan talks a lot about SaaS and like corporate world, but how do you use Dan Martell's Buy Back Your Time and commercial real estate?
Yeah, well, shout out to Malloy, my assistant. She's absolutely incredible. And I could go on talking about how I found her and how important it is to be a good leader and the best version of yourself. And I was only recently good enough at being me and a leader to be able to hire her and attract her into my world, right? I had tried getting an assistant before a couple times, and it just didn't work because I wasn't ready. I wasn't the right person.
Mm-hmm.
I wasn't the right leader. I didn't have the right business. I wasn't talking to coaches. I wasn't doing what needed to be done for me to attract someone like Malloy into my life to want to work for me. So that's a big thing that people need to realize, is your ability to attract good people is based on like who you are as a person and how you show up every day. So shout out to her. I've barely trained her. I gave her the book. She's just incredible. That was another thing, is it was a really simple tip I got from another executive assistant. They're like, hire someone who has at least 2 years of being an executive assistant. I was like, oh yeah, that's like so simple, but that's so true. And so going through the resumes and things, it was like, oh yeah, this person's got experience. This person's got experience in hotels or whatever. And I was like, no. I need an executive assistant calendar inbox. And so your question about how have I implemented Dan's stuff? The first thing I did was the 5 daily non-negotiables. And I'll get to that in just a second. But to finish on the EA, the executive assistant piece, the second piece was I need to just get rid of everything that does not meet my dollar per hour, right? So let's say I only want to do things that are $1,000 per hour. Anything less than that I need to delegate, which means calendar, inbox. We hired a meal prepper. We have a housekeeper. We have car detailers that come by and clean the cars, and Malloy coordinates that. So getting rid of anything that sucks my energy. Really, it's an energy protector. Anything that sucks my energy and takes my time away from revenue generating activities or energy building activities. And so for this year, it's reach and reputation for me. So I'm doing things like this, podcasts, and starting my own podcast and speaking on stages and going to conferences and doing all that sort of stuff and creating more content. That is my revenue generating activity now. So my entire focus needs to be on connecting with people like you, doing podcasts, doing my podcast. And so everything else is now Malloy, or is either Malloy or we don't do it, or I need to find someone and hire someone to help me do it. And so she has now organized my calendar, my inbox. She handles coordination of guests, anything. I'm not in my email. I'm not in my email at all. So there's that. So the other thing with Dan in his business coaching is the 5 daily non-negotiables. So this was the foundation to creating my new life. And basically the first thing is I do these every single day. I review my goals 3 times a day, which means that I have to have goals to review them 3 times a day. And they're on my notes pad, my notes file. I write them down and I use triggers to review them. And so I review my goals 3 times a day. I work out every day, basically every day. So 5 days a week, plus I get outside, I do yoga, I do something else the other 2 days, break a sweat every day. I read 10 pages every single day. And that's been one of the biggest things. I read, and I actually read. It's not podcasts or audiobooks. I post on social media 3 times a day. I do at least 3 Instagram stories every single day. And then I reach out to at least 5 people every single day to connect, whether it's a business thing or whether it's just giving props or connecting with people or connecting other people with other people. But basically I have now, through the Instagram stories and through the 5 daily opens or the connections, I have expanded my network tremendously, right? Just reaching out to people and saying, hi, or can I get on your podcast? Or do you want to be on my podcast? Doing that stuff has now expanded my universe, and the reading is feeding my mind and the fitness is feeding my body. And then reviewing my goals keeps my mind so focused on this is what I'm trying to accomplish. And so those 5 daily non-negotiables, now when I'm doing my coaching with other people, people, that's like the first thing is you got to do these things. Because if you just do that, reviewing your goals 3 times a day, it removes the freaking distractions, the shiny object, I got to do that. Look at your goals. This is what you said you want to do. So frickin' do it, and then go talk to people that will help you do it. So there's a lot to that, but basically the 5 daily non-negotiables, and then hiring an executive assistant and a meal prepper. Those have been the biggest influential things. And then just taking Dan's messages that he puts out and distilling them into my own and sharing them with the world has been life-changing for me.
That's so cool.
Yeah, it seems like it. And just listening to the end of his book where he talks about like all the things he does in his personal life, just outside of business, it's mind blowing. I know we're not there yet exactly, but it's coming. It's coming quick, and I could see the impact that it's having on you and your business. And being very dialed, very focused on exactly what you're doing and what you're not going to do is huge. It's important. It's important. So I really appreciate that sharing that. I think we're kind of running out of time here, so I'm going to let you go. But I appreciate it. Kassidy, how can people connect with you?
Yeah, follow me on Instagram. It's at Kassidy.Warren, and Kassidy's with a K, so at Kassidy.Warren. And then I am starting a podcast. The name will be coming, so name is unknown right now, but I am starting a podcast. I've recorded episodes, and that I'm planning to release the first week of February. So
awesome.
Depending on when this comes out, come follow me on Instagram, and then you'll see the podcast there too.
Yeah, we'll absolutely promote it.
Thank you so much, Kassidy.
Awesome. Yeah.
This was absolutely great.
Appreciate you guys. Yeah, this is incredible. Thank you so much, and good luck on your journey.
Thank you.
Thank you. You too.
Thanks.